Hi, I'm Lauren Taylor, Managing Director of Active Property Group. The fees involved with any investment is something you need to be well aware of before you invest your hard-earned money. In this video, I'll let you know about what fees are involved with APG's pooled mortgage fund and also some of the fees you need to look out for with other funds. When APG release our quarterly results, the returns are net of all fees other than the retail investor fee of 0.5% per annum. So if you see returns listed on our website or in other ads or marketing, then you know that this is actually what is being distributed to investors unless you're a retail investor. As a retail investor, you only need to subtract 0.5% from the quarterly return to calculate your distribution for the quarter. For instance, if we announced a quarterly return of 9% per annum, then retail investors will receive an 8.5% per annum return for the quarter. So why is there a retail investor fee but no wholesale investor fee? A retail investor fee is charged because our retail fund is operated by an independent trustee called Primary Securities Limited, and the retail fee goes directly to them. This allows us to be able to offer investment opportunities to retail investors, as previously we were only able to accept wholesale investors. Primary Securities oversees the activities of the fund and ensures that Active Property Group is acting in the best interests of investors at all times. Primary Securities deducts the 0.5% fee before paying the quarterly distribution, so there is no need to pay anything upfront. For those wondering if you can qualify as a wholesale investor, you must meet the following criteria. You must be a person or entity who initially invests at least $500,000, or you must be a person or entity that has obtained an accountant certificate within the preceding 6 months stating that you have at least 2.5 million in assets or have an income of over 250,000 for the last 2 years. While APG has tried to keep our fees to a minimum, there are many fees that other fund managers might charge investors. Some of the most common fees charged in pooled mortgage funds include application fees. Many funds charge a fee to investors when they first invest. This could be anything from 1 to 5% of the invested amount and may be required as an upfront payment, or most commonly is deducted from the first distribution payable to the investor. Secondly is management fees. This fee is charged by the company managing the fund and is usually a percentage of the assets under management. It covers the cost of managing the fund, including selecting and managing the mortgage loans. APG's management fee is charged to the borrower. Thirdly, performance fees. This fee is typically charged if the fund exceeds a certain level of return. It is usually a percentage of the excess return above the benchmark or hurdle rate. APG does not have a performance fee. Number 4 are legal and accounting fees. These fees are charged for legal and accounting services provided to the fund. For APG, these costs are covered by the mortgage manager. And lastly, redemption fees. This fee may be charged when an investor wants to withdraw their investment from the fund. APG does not have a redemption fee. It's important to read the fund's information memorandum or product disclosure statement carefully to understand the fees that will be charged, as well as any other terms and conditions associated with the investment. If you have any questions about fees, then please get in touch at investorrelations@activepropertygroup.com.au. Thanks for watching and see you next time.